Welcome to This Explainer. Listen, we are currently standing on the edge of what is arguably the most unprecedented shift in global wealth and power of our lifetimes. What started out as this really exciting leap in computing capability, well, it's rapidly mutated. Artificial intelligence is no longer just a fascinating story about technology. It has absolutely transformed into a high-stakes stock market story, it's a ruthless geopolitical story, a massive wealth creation story, and, quite possibly, one of the most dangerous financial bubbles in human history. So over the next few minutes, we're going to unpack the intense forces of innovation and, frankly, the raw greed that are completely rewriting the rules of global finance right before our eyes. Think about it like this. For centuries, humanity essentially dug into the dirt to find wealth. We fought massive global wars over gold, over oil, over physical land. But here we are in 2026, and the new gold is no longer underground. It doesn't need a pickaxe, it doesn't need an oil rig. Today's true wealth exists inside highly secure, hyper-cooled data centers. It's woven into incredibly complex algorithms, and it's powered entirely by artificial intelligence. The physical extraction of resources from the earth has been almost entirely replaced by the relentless, massive processing of data. So here is our roadmap for today. We're going to cover a lot of ground. We'll start with the new gold rush, then look at the empires of the AI era, followed by the global chip war. After that, we'll dive into India's AI dilemma, examine the undeniable signs of a financial bubble, and finally, wrap up with the future of wealth. Let's dive right in. Section 1. The new gold rush. Okay, the world is clearly gripped by this financial mania right now. But to truly understand the absolute frenzy of today's market, we have to rewind a bit and look at the exact spark that ignited this whole thing. It all started with what we now universally call the ChatGPT moment. That was the catalyst. Because before that specific moment, artificial intelligence was, largely theoretical. It was basically confined to university research labs and science fiction movies. But suddenly we had this interface that could actually write, code, reason, and converse with human-like fluidity. And it was accessible to literally anyone with a Wi-Fi connection. Students used it immediately. Businesses adopted it overnight. And crucially, this is the big one, investors looked at this capability and experienced just sheer terrifying panic, a deep existential fear of missing out on the biggest technological leap since the internet itself. And the scale of the financial boom that followed, it is staggering. We are talking trillions of dollars, not billions, trillions, with a T. Between 2023 and 2026, massive global funds aggressively shifted their entire portfolios into anything even remotely related to artificial intelligence. Tech stocks just completely dominated the global markets, driving this incredibly dangerous level of market concentration. The prevailing belief on Wall Street became very simple and very absolute. AI is the undeniable future, and therefore every single AI stock must go up forever. It was and still is a textbook gold rush mentality. Moving into Section 2, Empires of the AI Era. This brings us to a really pivotal question. Why in the world did a company originally known for making graphics cards for video gamers become the undisputed king of the entire AI era? Well, the answer lies in the actual fundamental architecture of computing. You see, the incredibly complex math required to train these massive AI models requires something called simultaneous parallel processing. Standard computer chips simply couldn't handle that efficiently. But graphics processing units, or GPUs, they were perfectly designed for it from day one. So practically overnight, Nvidia looked around and realized they were holding the master key to the entire future of tech. Because here is the absolute bottom line. AI runs on physical chips. It is that simple. Without GPUs, there is no ChatGPT, there is no AI image generation, there is zero AI infrastructure. All these grandiose software dreams are entirely bound by the very hard, very physical reality of semiconductor manufacturing. Nvidia's GPUs became the absolute bottleneck for the world's most advanced technology. And that demand, it massively, vastly exceeded supply, leading to an explosion in their revenue and a stock market valuation that totally defied historical precedent. Now, let's look at the giants who are actually buying all those chips. This massive infrastructure war is defined by a highly specific set of resources. Look at the absolute monopolies held by Microsoft, Google, Meta, and Amazon. They are dominating this era because they possess an unassailable combination of assets. We're talking massive cash reserves, endless cloud infrastructure, vast oceans of proprietary data, and unprecedented computing power. The AI boom, ironically, did not democratize technology. Instead, it made big tech's monopolies vastly stronger than they have ever been. And as a result, Global markets are now precariously dependent on the performance of just a handful of these massive mega corporations. Section 3. The Global Chip War. Now we have to zoom out because this isn't just about corporate stock prices anymore. It's a full-blown modern technological Cold War. On one side, the United States views advanced AI and semiconductor capabilities as an absolutely critical economic and military advantage. They are aggressively deploying export controls and severe chip restrictions just to maintain their dominance. Conversely, China is pouring immense capital into domestic semiconductor industries, AI research, and surveillance technologies to build a completely self-reliant ecosystem. Semiconductors have effectively transformed from consumer tech components into strategic national assets and heavily guarded geopolitical weapons. Section 4. India's AI dollar. Let's look at how this impacts a specific crucial part of the global economy. For decades, India successfully built an empire, positioning itself as the world's digital workforce. But today, their key sectors are highly vulnerable. Think about it. IT outsourcing, entry-level coding, customer support, data entry, all these repetitive digital tasks. These are the exact capabilities that artificial intelligence is currently automating with just ruthless efficiency. This isn't a future problem. It's an existential threat happening right now to massive segments of the Indian economy. The very foundation of their global digital service dominance is sitting directly in the crosshairs of advanced AI models. Yet here is the crazy paradox in all of this. While the Indian workforce faces this very real, looming threat, a dangerous retail investing mania has completely swept the country. Driven largely by YouTube finance influencers and incredibly speculative hype on platforms like Telegram, a massive wave of retail investors are just blindly pouring capital into literally any stock with the word AI attached to it. They are buying at absolute market peaks, entirely driven by momentum without understanding any of the underlying business fundamentals. It is a highly volatile, highly dangerous combination. Widespread economic vulnerability mixed with rampant financial speculation. Section 5. Signs of a financial bubble. Look, financial bubbles, they're never actually about the technology itself. They are always about human nature. It's a psychological cycle, and it always follows these exact same steps. First comes the greed, right? Early adopters make absolute fortunes, and everyone sees it. That triggers step 2, herd mentality, where the masses just follow blindly. Then comes step 3, the big one, FOMO, the terrifying fear of missing out. FOMO completely destroys rational analysis. And finally, we reach emotional investing. That's when people are no longer buying underlying businesses, they're simply buying price action. We saw this exact cycle in tulip mania. We saw it in the 2008 housing crisis. We saw it in crypto, and we are absolutely seeing the exact same psychological patterns playing out in AI today. Now, this comparison between the dot-com era and the AI era, this is probably the most vital lesson of financial history you will ever hear. Back in the late 90s, investors believed the internet was going to change the world. And you know what? They were absolutely right. But massive overvaluation still led to a catastrophic market crash where everyday investors lost 90% of their wealth. Fast forward to today. AI is undeniably changing the world. But just like the dot-com era, the massive speculation and overvaluation are completely rampant. The crucial takeaway here is this. A technology can be a legitimate world-altering revolution, and its investors can still lose absolutely everything if they pay the wrong price. You know a market has completely detached from reality when you see this principle in action. In bubbles, companies stop selling actual products, and they start selling dreams. Right now, there are thousands of startups that are simply slapping the letters AI onto their branding and pitch decks just to capture easy, massive venture capital funding. They have weak business models, zero proven profitability, and completely unrealistic, sky-high valuations. When easy money floods into a sector like this, it breeds profound, dangerous structural weakness. Which brings us to our final section, Section 6, the future of wealth. We really have to honestly confront the dark side of this massive wealth creation, because the vast majority of AI wealth is heavily concentrated at the very top. It's being funneled directly into big tech monopolies, a very small circle of AI billionaires, and massive institutional speculative investors. For the rest of the world, this boom carries major risks. It risks accelerating global inequality, driving widespread job displacement across multiple industries, and creating severe economic instability if this massive market concentration unwinds violently. Because boundless hype, it always eventually crashes into very real, unforgiving physical constraints. Silicon Valley is currently spending billions on infrastructure well before the profits have fully arrived. These massive AI data centers consume staggering, almost unbelievable amounts of electricity, which is actively straining national power grids. They are draining millions of gallons of local water resources just for cooling systems. The environmental cost, coupled with the trillions in capital expenditure or CapEx risk, is immense. If AI revenues eventually disappoint Wall Street, that massive infrastructure debt could easily trigger a global market panic. So if this bubble does burst, if the hype slows down, if consumer confidence weakens, and it triggers a global recession, who actually makes it out alive? The answer is cold, and it's deeply practical. Survival will belong to companies with actual proven profitability, real businesses making real money. It will belong to the hard infrastructure providers who actually own the physical, tangible assets. And most importantly for you, it will belong to disciplined investors who practice strict risk management and diversification rather than just surrendering to emotional market momentum. I want to leave you with this absolute, unyielding truth. It's drawn impartially from centuries of financial history. Technology revolutions survive. Speculative excess usually doesn't. The AI revolution is incredibly real, folks. It is going to fundamentally transform human civilization and the future of the global economy. But the immense speculative excess that's been layered on top of it, the companies with zero profits, the retail investors buying blindly into the hype, that excess will almost certainly be violently wiped out by the markets. It happens every single time. Which brings us to the ultimate question you really have to ask yourself as you navigate this new era. Is the current state of artificial intelligence humanity's greatest opportunity, or is it history's biggest financial illusion? Somewhere between true world-changing technological innovation and unrestrained human greed, the future of your wealth and the future of global finance is being permanently decided right now. Thank you for joining me for this explainer. Keep your eyes open, stay disciplined, and please continue to look past the hype.